We have much brighter days ahead for silver and gold, and there are a lot of reasons why. We got a ton to cover in this video. First, I want to say thank you for being here. Thanks for being part of Ron's Basement. I'm a little sick today, so I apologize for my voice. But if you could give me some sympathy and maybe subscribe to the channel, that would make upstairs Susie very happy. We want you to come back. We want you to be part of this community because there is so much going on. We got a ton to cover. Let's start with what happened yesterday. Jerome Powell, our old friend, here he is, right? Jerome Powell in the Federal Reserve basically did this yesterday, announced money printing. Yeah, sure, he cut rates by a quarter point. Yoop, big deal, right? But he also signaled the end of QT, which is quantitative tightening. Hold on, having some tech issues, which essentially when you quit QT, that's kind of like QE, okay? When you compare what we've been going through with quantitative tightening, now that that will be ending, I would say that that's kind of like announcing quantitative easing, which could probably be the next logical approach. But the big key takeaway here is lower interest rates, less QT, doing that in an environment with high inflation. Okay, unless you believe the Bureau of Labor and Statistics, it is a recipe for much, much, much higher. We got the wind in our sails, baby, if you're invested in gold, silver, and precious metal mining stocks. So we're not going to spend any more time on that. We're going to look at some other incredible data about what's going on in both silver and gold because it just never ends. You know what we need to do? We need to go out and check on the silver and gold price because last I checked, it was putting a little bit of a smile on our face. Hold on, guys. We're going to get there. Let's go out to Google. We'll do this together. Let's go to the KITCO spot gold and silver price. Excuse me. I do apologize for my voice instrument not working properly today. And wow, look at that. Gold on the spot market up $68. Silver up $1.20, flirting with $49. Look, I wouldn't be surprised. And actually, I wouldn't be. Don't get mad. Don't throw eggs at me. If we go through a period where we have some consolidation in the metals prices, silver between $46, $45, and $50 per ounce, gold, maybe stays in the 3,800 to 4,200 range. That would actually be healthy and build a new foundation. We want all the wimps to get out. All the people that bought in the last 6 months are like, oh, it's not going up anymore. Bye-bye. Okay. And we want those people to be replaced by solid stackers, people that really know and believe in the future of silver and gold. How about if I told you there's one new technological advance coming that could indeed eat up all the silver that's produced in the world on an annual basis? Let's go out to the Silver Academy. They did some back of the napkin figuring. In the headline here, massive silver demand looms. The two largest uses not reflected in prices. And what he's talking about, that's the basic data. Right now we're using 1.2 billion ounces. We only mine 800 million. There is a silver deficit, of course. But if we go down here further, this is the silver battery bombshell. What he's talking about are the solid state batteries. And we'll come back up to this chart next. Let's just read this. The real shock is only beginning. Samsung's solid state silver battery technology is now approaching mass production. Each electric vehicle utilizing a Samsung battery could require about 1 kilogram of silver. An astonishing figure when more than 21 million electric vehicles are built every year. So supposedly these solid state batteries, they charge much faster. They're less of a fire hazard. They hold their charge. You can get like twice as many miles out of it. There are real benefits. I've heard that Toyota in their Lexus brand are going to be the first to roll them out. So this is a real thing, and this really could be happening. But then he applied some basic sorry, guys. I had a cough attack. Bear with me here. Some basic math to what's going on. And if there's broad adoption, 80% of market share. EV batteries alone would require between 750 million ounces and 1 billion ounces. Silver's scarcity will not be a headline. It will be a hard cap on industrial innovation. And what we're looking at up here on this chart shows just some rough projections, right? If there's 21 million cars produced, let me get the crayons out here, in 2026, that would use 751 million ounces. If we go to 2028, and let's say there's 25 million EVs produced, that would be 881 million ounces of silver. That would indeed eat up the entire mining output, because mining output peaked back in 2016. Okay, our friends at the LBMA had some interesting, there was a big LBMA conference, the London Bullion Market Association, right? Over there in London, England, where they deal with physical metal. Right? I got the funniest thing ever we're going to get to here in a second. But we got a prediction of $60 per ounce silver out of the LBMA conference. And even more stunning is what we heard from UBS. Before we do that, I do want to say thank you to channel sponsor First Mint. They're a silver mint located in Las Vegas, Nevada, owned by First Majestic Silver, Keith Neumeyer's massive silver mining company. So First Majestic mines the silver in Mexico, ships it to Nevada, where it's transformed into products like this. This is a silver bar from First Mint. It's upstairs Susie's favorite. The silver literally goes from the ground, from the mine to the mint to you. They've got great prices, all original products, super high quality, free shipping on orders over $299. And when you're there, make sure you go through and try to find this. This is the Folds of Honor 10-ounce folded American flag silver. It benefits the spouses and children of fallen and disabled members of the first responder and military communities. Again, free shipping over $299, and there's a discount code, VIP RB, like very important person, VIP RB Ron's Basement. Okay. Thank you, First Mint, for sponsoring the content and for allowing us to get together down here as basement dwellers. Don't forget to subscribe. Okay. I won't say it again. Let's go to the UBS report and see what we're heard from UBS. This comes from Metals and Miners. And what we are seeing here is UBS. Let's talk about UBS first. Massive investment bank. Their chief investment officer said that client gold holdings have doubled, and the number of clients adding gold has gone up by 3 times. That's a big deal, because this is the big Swiss bank, the big Swiss investment bank. And we're hearing about more people being interested in gold. People being interested in gold is also good for silver, those of you that are hardcore silver stackers. But this shows us institutional adoption, and it's happening right now. Now, the LBMA, this was an LBMA conference. Let's just read this in yellow. The LBMA Global Precious Metals Conference has just delivered an important and not to be overlooked message for those following the precious metals cycle today. Here we go. Wayne Gordon, Managing Director and Chief Investment Officer at UBS Bank, quietly dropped a critical piece of information that signals the magnitude of institutional banking's pivot toward gold. Client gold holdings doubled this year, while the number of clients investing in gold has tripled. In yellow, when the world's largest wealth management firm begins reporting doubled allocations and tripled participation rates, it creates competitive pressure that forces other institutions to offer similar opportunities to their own clients. It's like trying to drain Hoover Dam with a garden hose, according to Doug Casey. The LBMA conference, and this is the interesting thing. Here we go. Then they had like a poll of all the people there, the big investment bankers. The LBMA, London Bullion Market Association, conference consensus of $5,000 gold and $60 silver by Q4 2026 isn't speculation. It's institutional banking leadership that is guiding the path forward. The upward trend is not only intact, it will continue onward. Speaking of which, let's go out to our next story. Okay, foreign central banks from bar chart on X. Foreign central banks now own more gold than U.S. Treasuries for the first time in 30 years. I think this came from Crescat Capital, but what a beautiful chart, guys. As you can see, the yellow line right here are gold holdings, which, starting in 1980, went down, 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 while the blue line are U.S. Treasury holdings, which had gone up, up, up. Okay, now right over here, which they've got circled in white, and I'm going to carefully trace in red. Sorry, Tavi. Now we are at this point, guys, where right here you can see it. Okay, gold is now a bigger asset on the balance sheets of foreign central banks than U.S. Treasuries. We are in a new paradigm. And how about the funniest thing? We like to laugh, right? We got to laugh. We've been laughing for years when our neighbors, who we like to call the sheeple, were laughing at us. Now we're laughing. But Vince Lancey, who I've talked to before, it's been a while, great guy, well respected. He put out something that I think is one of the funniest tweets of the year so far. Get a load of this, guys. Here, I'll highlight it in blue for us. The LBMA, this is according to the LBMA, China and India are manipulating the gold price by buying it and taking delivery. I think he'd say the same thing about silver. So the LBMA is mad, right? That China and India are actually buying gold. They're manipulating the price by, when they buy gold, actually saying, well, yeah, we actually want it. I'll tell you what, guys, the market, this is what I'm hearing. I got some on the ground information for you from the coin stores. But what I'm hearing when it comes to this big kind of world paper, electronic gold and silver market is that they've kind of papered over things, pardon the pun, for the next couple months. And that when we get into late December, that things could get very, very interesting again. Like I said earlier, I wouldn't be upset to see like a period of consolidation right now, but the problem really has not been permanently fixed. All this silver that was going from China and from the COMEX in the United States over to the LBMA, there was a serious problem over there, and it's been papered over, essentially. Maybe there was some real metal that went, but the underlying fact still remains that there's big, big issues out there, and it's going to be interesting to see how that falls out. And unbelievable. We went through a very difficult period in the gold and silver market last week. A 10% drop, but I have some great news, some astonishing news for you about what's happened the last 10 times that we had a 10% drop. We're going to get to that next, but first, I want to say thank you to First Mining Gold. They also sponsor my gold and silver content. That's a stock that I owned long before they sponsored the company. They're a gold development stage company. They've got two massive projects in Canada, Springpole in Ontario and Du Parquet in Quebec. It's gold in the ground. It's been drilled. Millions and tens and hundreds of millions of dollars spent to define the gold in the ground. The big miners are going to need to replenish their pipelines, and they're looking to grow. There aren't many big multi-million ounce projects in favorable jurisdictions like Canada. You can learn more about them at firstmininggold.com. Now let's talk about this horrible situation we all went through, right? Gold was down 10%, but I've got a happy ending for you. And thank you for joining me down here, guys. It really is just a cold, dank basement. Oh, hold on. If you're not down here, this is incredible. Again, from Metals and Miners, there's a great Substack. This was from the free section. Rhymes, why gold's violent 10% crash in 6 days has been a 10 out of 10 generational buying opportunity. So let's look at these charts, and this is real easy to see and real easy to understand. And I don't have the right chart up. Now I do. Now you can see it. So there's the gold price. Okay, I'm going to circle that for you. And you can see that's the blue line. These are 6-day percentage changes. And as you can see over here, down here is 10%. We hit that just last week. However, the happy news is down here because it lists out on the left all the different times throughout history that the gold price went down 10% or more in 6 days. And then up here, like 2 days later, 3 days later, 4 days later, if we go all the way to the right and go to 2 months later, you can see that on every occasion, the gold price went up. And of course, that's good news for silver as well. 10 out of 10, right? There's no guarantee. Don't make any financial decisions based on what I'm saying. But I believe that in 2 months, I just have a feeling $4,600 gold is not going to be out of the question. Are people still buying? That's the question. Okay, let's go out to Reddit. A man from the street shares this with us. He said, I just went to my local coin shop expecting that the cases would be overflowing with gold and silver. This was all they had. They said demand has been very strong even at the higher prices. Don't believe the fake Crimex, I think he's referring to the COMEX here in the United States, or the LBMA. Okay, people are still buying. Buy the dip and raid. And then we get this from the Silver Academy, which adds even more fuel to that fire. Silver, global supply under pressure drives significant and soaring price revaluation. And this is interesting from India. Apparently, India's big. Hold on here. Yep, do I have the right screen up for you? Yes, I do. Hold on one second. Okay, apparently India's MCX, which is their version of the Shanghai Gold Exchange, it's their electronic market for silver and gold, went down. Okay, silver futures trade. Okay, and so this was their post from India today. Said a series of updates issued throughout the morning. The MCX stated that the issue was being addressed and that the trading would now commence from its disaster recovery site. Okay, yeah, it's a disaster, all right. Paper silver. But look at this. When the multi-commodity exchange suffered a massive outage and trading in paper silver contracts abruptly crashed, many headlines screamed about falling prices. Yet, on the ground in India's key markets, Mumbai and Ahmedabad, anyway, jewelers and dealers saw the opposite. Physical silver premiums actually rose as buyers scrambled to secure real metal despite what was happening on the screen. The divergence between plummeting paper prices and climbing physical demand is a classic lesson in how futures markets can become detached from real-world supply and demand, especially in times of technical disruption or trading panic. Okay, that's what's going on, guys. I got one more great thing for us to look at. This is astonishing. Do you know how precious metals are? You know how much silver there is in the world, how much gold there is in the world. But wait until you see this. This knocked my socks off, and I think you're going to find it quite astonishing as well. A visual demonstration of, from Visual Capitalist, how much gold is left to mine on Earth. And, where did it go? What happened? Oh, there it is. Can I get that to come up on the full screen? Let's see. Nope. Okay, so shoot. Hold on, guys. Man, I am all over the place. All right, so let's look at it this way. Okay. How much gold is left? And there's a pyramid in the background just for reference, okay? The big block is all the gold in the world that's ever been mined, and most of that is still around, about 22 meters by 22 meters. The smaller block are the remaining reserves, okay? Here, all the gold ever mined, and these are the remaining reserves. Now, this is not the crazy part. The crazy part is this. When you look at the size of a Ford F-150 pickup truck relative, that's all the gold left in reserves in the world, all the gold that is yet to be mined. And gold has been money for thousands and thousands of years. Look, the people at UBS know it's happening. The people at the LBMA know it's happening. We talked about that. We know it's happening. We are in a new paradigm a new world for the precious metals. It's going to be an absolute wild ride together. Before I go, I do want to say thank you to one more company who has supported me throughout the years, our good friends at Dirty Man Safe. Don't forget, they have a discount code, RON10. You bury these in the ground. You can put whatever you want inside here. Let me open this. They're very robust, very cool. Okay. You put whatever you want. I have a little plastic unicorn. Comes with a sleeve that you bury and a cap. Everything about this reeks of quality. You can check them out at dirtyman.com. And again, don't forget, RON10 is your discount code. And if you do bury some type of treasure in your yard, don't tell anybody, right? Because you're going to be like a pirate. That's what the pirates did. And people are still hundreds of years later trying to find the pirate treasure. So take care of yourself, guys. Okay. I really appreciate you joining me down here in the basement. Please don't forget to subscribe. That makes Upstairs Susie happy. You be good, and I'll see you, yes, you, next time. Bye-bye.